Well, something that's a little bit less volatile so far in the session is Hon Hai.
Yeah.
They had some very, very good results out. It's the company also known as Foxconn, of course, but better than expected, essentially. It's all about that strong demand for AI. So the company's also saying it expects significant sales growth for the first quarter of this year. Our senior analyst, Tseng, joins us now for more. So, I mean, the company's already sort of been talking about that demand they're seeing for its AI-related products. But this seemed to even defy what we'd been hearing.
Yes, I think in Q4, the company indicated that the AI server, even though the revenue should be strong, they did indicate there's a potential product transition, which means that the number may not be that strong. But obviously, Q4 now looks better than consensus. And the company also expects the AI server business should be at least double in 2025. So apparently there's a very strong growth there. Longer term, I think that strength might actually extend into the next 1 to 2 years. But having said that, I think in the near term, because the product transition or sometime maybe because the production yield issue, we may expect some sort of a near-term fluctuation. For example, the company actually expect the Q1 revenue to be, even though the year-over-year growth is still solid, the sequential decline, they are expecting to be in line with historical seasonality. That, in fact, seems to suggest the number might be below the current consensus estimate. I mean, historically, Q1 usually down about 30% quarter-on-quarter. I think the consensus now looking at a 20% decline. So we are looking at some potential near-term pressure on the consensus. So this is something I think, maybe they will reflect in the market in the next few days. We'll keep watching on that.
Let's put everything in aggregate then. So on a quarter-to-quarter, there are differences. What does the entire year 2025 likely look like on aggregate?
I think, as I mentioned, AI server obviously is still a very important driver. And then for that particular segment, which is basically the cloud hardware segment for Hon Hai, last year's contribution, I believe, is about 1/3 of the company's revenue. And that actually shows a very strong growth because back in 2023, that segment's contribution is only like 22%. And for this year, we expect that segment's revenue to be at least 40%. So, as I said, the overall growth is still pretty solid. But just that, on the near term, I mean, say Q1, maybe this product transition longer than expected, or maybe because of some chip supply issue, which we're not sure. The Hon Hai's guidance seems to be softer than Street expected.
I mean, these are products that obviously have higher margins and lots of growth. But what about what was sort of the bread and butter for Hon Hai, which was the iPhone assembly component? How's that looking?
That apparently is not very exciting. Last year, I think the overall iPhone revenue was roughly flattish year over year. For this year, there's a chance that it might get slightly better, given that we do see, for example, iPhone is going to have a new SE version coming in Q2. So that might help the near-term sentiment. But overall, I think the bigger issue is about whether the iPhone 17 in second half will bring something new to the table. I think maybe it's a hardware upgrade or maybe it's the better feature related to AI, I mean Apple Intelligence. That is something that we'll have to keep monitoring. But in general, given the low base last year, we do expect this year they may do slightly better. Having said that, from Hon Hai's perspective, I think the cloud hardware or AI server will remain the brighter spot for 2025.
Tseng, thank you so much. Our senior analyst there out of Bloomberg Intelligence.